This video describes how to develop normalized financials for valuations. Normalization is the process of removing non-recurring expenses or revenue from a financial metric like EBITDA, EBIT, or earnings. Multiples of normalized EBITDA are commonly used to establish a value for the company. It's important that each normalization adjustment is carefully considered. Buyers don't want to overpay for a multiple on earnings that will not be realized in the future, and adjustments made by the seller need to be carefully documented and tied to source financials for the buyer's due diligence. Establishing the correct value for a company can get complicated. Kognetics simplifies the process through automation. Kognetics enables analysts to make adjustments to the income statement, enterprise value, and market cap by presenting all the potential adjustments in one place, creating a simple checklist. Analysts control what adjustments are made. Normalization can be completed across multiple reporting periods, including the 5 most recent. Kognetics can also apply normalization to the last 12 months reporting periods, which is useful in creating comparables. In fact, Kognetics is designed for analysts to create comparables directly from the normalization process. All adjustments are fully documented, creating a traceable record of what line items were adjusted. Let's go into the application and start by selecting a company from an existing project. I've selected SanDisk as my target company, and I'll click on the normalization icon, which takes me to the work screen. The default case is set up to normalize income statement items from the current financial year. Click on the Normalize button and a high-level roll-up of items is presented. These are all the items that are available for normalization. By clicking on the major items, all sub-items are revealed. Each line item amount contained in the boxes is sourced from the income statement. Further detailed breakouts are picked up from other disclosures and footnotes from within the filing. Any value can be changed, removed, or added from the input boxes. The analyst is in full control. Items written in red are non-XBRL items, which means they're sourced from other areas in the filing. Items in orange are other non-GAAP terms. Highlighted filing icons on the right indicate the filing where the footnotes were referenced for the line item. The reference can be a policy or contain data that the analyst can parse through. Let me show you how to drill down on a line item and you'll see the power of Kognetics. I'm looking at the share-based compensation item within EBITDA. Clicking on the highlighted 10K item provides the policy and the allocation of share-based compensation. I can see from the table how this expense was allocated. From the table, I see that $87 million in share-based compensation was allocated to research and development. Now let me show how Kognetics recognizes that item. Going back to the normalization sheet, I can see the $87 million was picked up by Kognetics and is captured in the box. If I want to make an adjustment on this item, I can simply check the box on the left and it will be added to the EBITDA calculation. I can go into the G&A section and identify the same item for sales and marketing. Here I see the share-based compensation amount that was referenced earlier. I can check off on the box to make sure that I carry this change forward. Now let me show how to create a manual adjustment to the normalization. Under the total revenue is a line item for revenue called Related Parties. Looking at the footnote on the 10K reveals that there is a revenue from a joint business called Toshiba called Flash Ventures in the amount of $3.1 million. There's no amount captured in the input box, but I may want to make an adjustment on this item. I can manually enter the number and then check the box to make the change. I'll enter the full amount of $3.172 million and then I'll check the box. Now I'll click the Submit button and then Confirm. And when I click on the Normalization History button, I can review the exact changes that were made. I can view the change made to reduce revenue by $3.1 billion. I can also view the share-based compensation expense allocations that were added. What I showed was the income statement normalization for one period. Statements for other periods can be determined as well by selecting another reporting year. Adjustments can also be made on a last 12 months basis. All normalization results are available for comparables. In summary, Kognetics makes it easy to normalize income statement items by identifying a comprehensive list of items for adjustment. Analysts have the ability to pick and choose the adjustments based on their own methodology. The adjustments we went through would have taken a significant amount of time, but Kognetics gets it done in just a few minutes and creates the information necessary for follow-on analysis like comparables and company profiles. Thanks.